So this is super beats. What it's actually going to do is the amount of nitric oxide your body makes. So
Ni hao ma. G'day, mate. How are ya? How's your mum? Good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders stationed around the world, synchronizing our watches, coordinating our satellites. Wait, that's not how it goes. Anyways, we're here. Technical analysis, fundamental analysis, dollar, yen, gold, pound, oil, Bitcoin, SCO. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, always be small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey. Yeah, I got the sunnies on because I'm going golfing, baby. Yeah, going golfing. Yeah, actually, you know what? The sunglasses are better. The lights are bright. Anyways, I'm going golfing after this. Yeah, going out to the country club, get my game on. So That should be good. Don't worry, I'm not wasting my whole day. I think I'm only going to do the back nine. Jack Nicklaus design course, which is good. I haven't played it for a while, so it should be fun. Okay. What's my handicap? I'm a currency trader, not a golfer. I'm a serious trader, not a golfer. Cool. Cool. So, all right. So, what are we doing here? We're going to do some currency trading. I'm going to focus on technical analysis. There's stuff going on. It's the Wednesday before non-farm payrolls. So guess what's going to happen in just a couple of minutes? Yep. So we got news coming out. Should be very interesting. But really, I want to stay technical. I want to look at where we are in the process of what we've planned and where we're planning on going. So I'll do my best to answer your questions. Make sure you ask in the chat. Also, in the chat, this is my office. You're in my office. So treat this as a professional environment. So chat with dignity, treat each other with respect. And spammers, we're not really interested. We're too smart for your crap. So piss off. What else? I'd like to thank Traders Way for being part of our community as well. You're trying to learn how to trade so that you can be a successful Forex trader. Traders Way, being a foreign exchange broker, would like to find successful traders to trade with their platform and utilize their execution partners and their liquidity partners. So, sounds like maybe we could have a meeting of the minds, build a community around education and a drive for success through being disciplined and conservative. So if you value those values, if you value those values, they value those values, so we can value those values together and create a valuable community. So thank you, tradersway.com. Please visit and open up a demo account. Perhaps they'll earn your loyalty and respect like they've earned mine. Coolio, can you see this? Yeah, so it looks good. So where did I have it? I had it here. This is, I think, where we left off. This is just where we were yesterday. Great British Pound versus the Swiss franc, otherwise known as Pissy. Theta says, Wayne, why USD starting strong? Why this change in behavior? I don't know. Okay. I don't know. So do you have a plan for it? Are you managing the risk? Remember, I don't know the future. I can only tell you on days when the market looks like it's a good opportunity to sell the dollar, I sell the dollar. And on days that the dollar looks strong, I don't sell the dollar. But those days I have to choose. Do I take short-term profits or do I stay the course? Okay, for example, let's look at Pissy. It's not a good trade. It's a really slow trade. This started last month, the beginning of April. You could have taken a shot based on a basic swing trade. You can just kind of look at where my stop is for guidance here. That would have been probably an entry, double bottom. So your stop would be down here, right? And you're kind of disappointed because it hasn't done anything. Yeah, well, it hasn't made a lower low either. So no real reason to be out of the trade if you entered it around May 6, May 7, May 8, May 9. Okay. If you entered it way back then, here it is June, and you're disappointed. But you're not out either. So you might say, well, why was the dollar strong? So typically when the dollar's strong, the Swissy's strong. So this was yesterday. And you might say, why is it strong? You're like, is it strong? Okay. And you might say, well, it's been strong for the last 13 hours straight. And you're like, well, I've been in it for 4 weeks, so it just looks like, a challenge at resistance, right? So it's not necessarily strong is what I'm saying, Theta. Depends on your time frame. Okay. Typically, a currency will go from strong to weak or weak to strong because of support and resistance. Ultimately, that's the answer. What's up, Gary? Why is something what? What? You can't see what? Oh, I see. I see. Hang on. La 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 la. How is that, my friend? Daniel, the better question is which Sharpe ratio are they using? Okay, but it's fine. Okay, cool. So, any questions on this? This is a trade plan set 3 weeks ago. And I entered it yesterday. Sorry, I was up till like midnight or something. It was the last thing we did yesterday, and we were still at the trade entry, and I discussed it's not good, it's not bad, it just is. Are you going to try? What's the opposite? What was likely to happen? What are the correlated other pairs doing? Should the Swissy be weak? Should the pound be strong? And, you know, so entered the trade. Okay. That's right, Cash. We did it yesterday, right? We did it yesterday, so you could watch yesterday's video. And it was right at the end. I don't have a timestamp or anything, but yeah, we looked at other things. The other horses were out of the gates, so this is the last one to grab. Yeah, but the more interesting part is it's based on our analysis 2 or 3 weeks ago, and then also a wishing that Swiss franc turns back to old traditional correlation, let's say. The tone in your voice doesn't resonate that you trade or over enthusiastic. No. Yeah, no, it's not a good trade. No. No. Okay. But it's a trade. That's all. Yeah. I rarely get excited about any trade, but this isn't. I would, again, this is an example. So, like a lot of people ho and hum and hum and ho and hum and hum, and it takes 9 trade plans to get into a trade, right? And very often they're using too many things to try to make basic decisions. I was just showing that it's a valid trade plan. And if I don't do this right, I'll lose a little bit of money, right? But it's still tradable, okay? But very often what people do is they wait a little too long. They ho and hum a little too long. Often they don't have the conviction because they haven't done the work. So like they don't buy it here, but they buy it here and it comes down and then they get out here and you're like, well, weren't you supposed to aren't we supposed to be identifying like let's go back to the basics, right? Like, hey, yo, I thought our job was to be, analyzing support and resistance, right? So anyways. So whatever, just food for thought. It was just the last thing we did. You can see this trade plan from 2 weeks ago. Yeah, I'll probably do that. I'll probably do that. Yep, that would be fine. It'd be great. It's just a swing trade, right? Right. Yeah, there's certainly things much more compelling. Oh, for sure. Okay. But there's evidence now that, or at least argument now, that the UK could speed up its opening process or reopening process. Today marked the first day ever since COVID that someone in the UK didn't die of COVID. So, that pushes pressure on opening things up. And if things open up, the pound will probably do better. And if the pound does do better, I'll make money. Okay. That's it. Right? Also, look at our analysis too, right? What we're looking at, what we're trading, we don't know if it's the truth or if it will become the truth. But what we're trading here is this high, a retracement, and up. But on smaller time frames, it looks like this: retracement down. Then it's got to kind of start doing stuff like this over the next few weeks, right? Right? So this is the part that I'm trading now, is the up, the down, the up, the down, the up, the down, the up. So why did I buy it? Well, we had this planned out 2, 3, 4 weeks ago. So I'm buying a dip. Nothing complicated about that. And if I'm wrong, it'll come down here and I'll lose money. Yeah. Huh. Good thing I'm not over leveraged. All right. Let's do the currency indices. How are we doing? Yeah, sort of dollar was strong, then it was weak, now it's strong, now it's weak. Hey, do you think we're waiting for non-farm payrolls? Do you think we're waiting for the Fed meeting? Any chance of that? Yeah. Oh, Thiago's question is, what is a good trade for me? There isn't one. I don't really. Once again, in my opinion, if you're trading properly, none of it is exciting or good. What do you mean good? Right? What do you mean good? I took a trade because I did careful analysis. I interpreted it into a decision and made that decision. Then I do some basic technical analysis to confirm the market conditions. And if I'm a buyer, I buy at support. Dude, I'm going to make money, right? Like, there's no good. It's a well thought out trade that will probably make money. Like, what do you mean? It's not good. It's not exciting. There, like, that's what I'm trying to say. You're like, oh, I think I'll make money on this. So you put the trade on. I'm just doing my job, right? But like, so low risk and high profit. Well, not even that. I buy something, and once I've bought it, I'm not adding any more value to it except for managing risk. So except for deciding when to get out, I guess, right? But there's nothing good about it. It just is. I guess it's very Taoist or Buddhist or whatever it is. It's just a trade, right? So if you put thought into it and stuff, you're going to make some money, and that was the reason you took it. So there's no excitement around it, is what I'm getting. You're not surprised. It's boring. Okay. What is the BitCap index? Nothing really, so I'll remove that. I just wanted to see if this would do it, and I'm not sure what it's doing. I think it's just showing the price. Yeah, I think that's all it's showing. So we will change this to something else. I don't even know if ZAR could be done. So that's probably just Rand versus dollar. But anyways, you get the point. So let's see. So what am I doing? I've been buying Canadian dollar. That's good. I've been buying pound just more recently, so that's okay. I've been buying Aussie for a while. It's not good. It's not bad. It's not here and it's not there. I've been selling dollar, yen, and Swiss franc. Once again, not here, not there. Swiss franc is weak. Good, because I'm selling it. Pound is dollar's sort of neutral on the, over the last several days. Yen is kind of neutral over the next couple of days. But I would expect that, though, before non-farm payrolls, right? Peter, this code is at metatraders.com. Okay. So, yeah. So are we spinning our wheels waiting for non-farm payrolls? Yeah. By the way, what was the ADP? Does anyone have the number on ADP? Nelson said, hey, the CAD yen that I was crying about yesterday came back. Sweet. Okay. Data says if the market got more number of employment data, does it really matter for the market? Well, it's more like it's already priced in. Oh, they shifted ADP. Thank you, Evelyn. I figured that could have happened. The issue here is it's already really priced in. Are we trading the headline number? No. So how many people attended my macroeconomics lecture yesterday? We did fundamental analysis of economics. What's up, KG? Okay. And one of the things we discussed is what economic data you look at, but we're not actually that concerned with the data. That's not the point. So ADP would be part of that. I didn't even put ADP in there in my slide, but it's something you can do. But at some point, dude, make a decision. Right? You know, it's funny. Some people have these elaborate spreadsheets of every economic indicator there is, and they're nitpicking over whether it's 0.3 or 0.4. Dude, none of that matters. Right? Make a freaking decision. Are you a bull or a bear? Right? And one of the things we discussed is why that is. And it's not, right? It's not the data that matters. Does anyone know what matters? If it's not the data, why does tomorrow's ADP and Friday's non-farm payrolls, why does it ultimately generally not matter? I mean, they matter, but why does it generally not matter? How about this? What is important then? If it's not the data, then why do we watch the data? Monetary policy, thank you. Yeah. So we watch the data like the central bank watches the data, and we can make decisions not based on the data, but what the central bank is likely to do next because of the data. So one NFP, two NFP is not really a concern. 4 or 5 NFPs, okay, hey, maybe that'll change the policy at the Fed. That's what matters. Okay? Theta says, well, because the market is efficient and already reflected. Well, oops, there goes my glasses. Yes and no. So Theta, when you say things like that, that sounds like somebody has coached you from that kind of point of view, which is really a selling proposition for many, trading and market gurus. Oh, you don't have to understand fundamental analysis. It's all in the price only. Let me show you the 92 different technical indicators that I use, and everything's in the price, and blah, 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 blah. So I wouldn't phrase it that way. Okay? I wouldn't phrase it that way. And that is somewhat true, but it's not completely true. Otherwise, most of what I do would be impossible. Right? So it's more like what matters is the policy dictates the flow of money. It's not that it's priced in, but most of the time, the trends occur because of the business conditions. And the business conditions are influenced by the business cycle. And the business cycle is influenced by government policy. Both the central government and the central bank ultimately dictate the money supply. Okay, so that's all in the course in great detail. We finished week 10 or lecture 10. We probably have 5 or 6 more lectures to go, most likely. Okay. Yeah, efficient market theory, for sure. That's fine. For example, you can't really arbitrage Forex anymore, but you can arbitrage cryptocurrencies. Why? Because it's a young market and it isn't efficient. Okay? By and large, it's illiquid and inefficient because it's unregulated and there's different exchanges doing different things, and there's just a lot of things going on. So could you buy Bitcoin from Kraken and sell Bitcoin on Coinbase and make money on the slight difference in pricing? Yeah. Could you do that in Forex? You know what? I remember having a conversation about one of my boot campers doing that with his dad back when I was at the FXCM Expo in New York. I'm guessing 2006. Okay. And you could do that. And the way you would do it is you would have 4 or 5 different brokers, right? This is even before MT4 even existed. It's a long time ago. But so imagine every broker had a proprietary trading platform, a different technology, different servers, different liquidity partners, and different management. Some of the managers of the brokers back in 2004, 5, 6 were just straight out scumbags. Some were straight up inept and unqualified, and some were thieves and scammers. And then a few were legit. Okay. So anyways, what you would do is you'd open up, let's say, 4 different brokers, and you have 4 screens. And on each screen, you have their trading platform. And by and large, every single platform is showing Euro USD at about the same price. Let's say within a pip or 2. Okay? Because back then, the spread was 3 or 4 pips on a euro dollar, for example. Pound was like 7 pips was just the normal spread. But anyways, as far as the actual price, it was 1 or 2 pips different. Okay? And then all of a sudden, non-farm payrolls would be 2 minutes away. And all of a sudden, pricing would spread between these 5 or 6 pips, 7 or 8 pips sometimes, different prices. Again, different technology. Some servers were faster. Some software was faster. Some liquidity partners were deeper, which means they had more liquidity means better price discovery. So less liquid markets suddenly had much different prices than everybody else. And then all of a sudden the number would come out, and what you would see is like, in the first, let's say, 10 seconds, the broker at the top right would have a 100 pip green candle. The broker at the top left would have a 75 pip green candle. The broker on the bottom left would have a 50 pip green candle. And the broker on the bottom right would have a 100 pip red candle. And you're like, dude, but it should be green. So anyways, you found that you could buy The two other green candles that were lagging the one at the top right. So one of them, you can make 25 pips probably in the next 10 seconds. The other one, you probably make 50 pips in the next 10 seconds as they catch up because they just didn't have the liquidity that the main one did. Then the bottom right hand went red because those scumbag scam artist thief broker actually decided to trade against all the clients, wipe out all their long positions, and then even sucker all the stupid idiot loser Forex traders that just chased price without actually doing any research or any trade planning. Suddenly they would say, red candle, sell, 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 sell. Well, those highly over leveraged, highly uneducated traders, aka dumb money, would then sell, and then the broker would switch it the other way, and now the candle would go green 100 pips, green another 100 pips, and wipe out all those. And what you found out is they wiped out all their clients that were long, then they wiped out all their clients that were short, and a broker in the matter of, let's say, 2 minutes would clear out 1,000 of their clients' trades, pocketing a quick, $1 million in 2 minutes, trading against their clients, manipulating the price. Okay, now they all went out of business because they're scumbags and scam artists. And a lot of people learned the lesson of maybe they should know what they're doing before they do it, which is we call maturity of the market. But the rest was legitimate arbitrage. Now, Forex is highly regulated, right? And the liquidity is quite deep no matter what broker you're using. The technology is great where you're on the cloud or the servers are fast, right? All this kind of stuff. So by and large, so that stuff doesn't happen anymore, right? So you can't really arbitrage anymore. You probably could try, but we're not talking about 100 pip difference. We're talking about 0.3% pips different. And if you can catch that, I don't know if it's worth the risk or the effort, but maybe you can. But it's not the same as the old days, for example. But I'm sure, I don't know, but I'm sure, okay, I would be surprised if you couldn't arbitrage cryptocurrencies because it's like the early days of retail Forex trading. So most likely there are professional traders using really smart algos that can arbitrage. Okay. Like, doesn't 1 inch, does anybody, see, I'm still pretty new to all of this, but I think 1 inch looks at the price of multiple crypto exchanges offering Bitcoin, for example, and then can aggregate that into one standard price. So they're basically indexing it through all the exchanges to get one particular price. Well, if there's a need for that, there's obviously means there's differences in prices. So somebody must be arbitraging. Right? Oh, is there a movie on arbitrage? Cool. Okay. 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 How do I calculate the Sharpe ratio? I'd have to look at the notes. It was long discussions. Are you talking about the one that Ryan made? Because he and I had long conversations about that, and we actually contacted MyFX Book, and they're like, what Sharpe ratio are you using? Because it's very unclear. And they gave us the formula, and maybe I agree with their formula, maybe I don't agree, but essentially you have to look at your returns over the volatility. Okay. And so whatever measure of return and whatever measure of volatility, and over what period of time. Okay. Oh, they're all the same, even though the math is different. it's more interesting to say, like, what's the volatility to your returns? It's like, what's the risk to your returns, right? It's just another statistic to do in the research, but the conversation is much more telling. The idea here is lower volatility is better. Okay? So the question is, what kind of volatility are your returns? Well, if you look at this, if you look at this Sharpe ratio, and then if you look at our Z-score, and if you look at this other thing, and if you look at this other thing, and you look at this other thing, I'm like, I get it. Okay, you have moderate volatility. Okay, I got it. Right? It's like an indicator. It's not the indicator. The numbers, the interpretation is what matters, right? Is what I'm talking about high frequency trading? No, it's arbitrage. Cool. Okay, peso. Da 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 peso. I got my peso. Okay. The more I did, let it go, my peso. Take a look at Rand. What do you think of that trade, huh? What do you think of that one? Should I stick to? Yeah, it's fine, dude. See, Daniel, the important thing, of course, you have to have a good ratio. Yeah, well, they do actually, Daniel. So I had Ryan contact them and actually talk to them. And let me tell you, I think it took 2 or 3 days to get anyone on the phone that could actually explain it. Right? Like, how do you calculate your Sharpe ratio? That's Jimmy's job. Hey, Jimmy, how do you calculate the Sharpe ratio? Well, that's Kevin's job. Hey, Kevin, how do you calculate the Sharpe ratio? I don't know. Talk to Nancy, right? It's one of those things. Like, it's there, but nobody knows who does it, right? Ultimately, it's just your return over volatility. Okay. So I think what you should focus on is being able to explain whatever Sharpe ratio, any Sharpe ratio. What is a Sharpe ratio? Who is Bill Sharpe, for example? To have a casual conversation with somebody else. If you're able to do that, Daniel, like in particular, one day, a potential investor, you will earn so much respect and loyalty because you just sat down over whatever, over a cup of tea, a cup of coffee, a cigar and a whiskey, a meal, a cocktail, just a hike up the side of a mountain. And you're having this conversation, and you got to realize that your potential investor, they have money, they have worries, they have concerns. Can they trust you? Is Forex good? What about crypto? What about all the scams? Maybe I should be in the stock market. Hey, I heard about a bullet trade I should be on, right? There's lots going on, and everyone's worried, not necessarily about losing money, but they are, but also looking stupid and foolish and all that kind of stuff, right? Because their idiot friend at the country club says, are you smoking a cigar? Right? I made 300,000 on Dogecoin, right? And you're like, I don't even know what cryptocurrency is. And this idiot made 300K on Doge. And by the way, my Porsche mechanic cashed out $360,000 in Dogecoin profits, and he still has, the last time I talked, 1.5 million in Doge profits. So there he is. Doesn't mean he knows what he's doing. But so someone still will have these concerns like, should I be getting in Doge? I don't know what crypto is. Should I be getting in that? Should I be doing your Forex thing, Daniel? Or what about this other thing? And maybe I should get into real estate. And all of a sudden you have to calm their mind down, calm their worries down. And maybe so you're going for a hike and they're talking. And you're like, well, and you're asking questions, so tell me, potential investor. So what kind of investments do you already have? Do you have a retirement account? Do you have a trust fund for your kids? Do you have a college savings account? Or how exposed are you to the stock market? What are you doing with your riskier assets? Are you invested in China? Are you interested in global trade? Are you interested in, crypto? And all of a sudden they're talking and you're walking, right? Right? Like the son of a preacher man, okay? And at some point, then you can have much more relaxed conversations once you get to know each other. By the way, this is required KYC, know your customers. So at some point, then you can discuss things like, so why are you not in crypto? Oh, well, I hear this very volatile. That really scares me. And you're like, well, one measure of volatility that you can use across the board, whether it's stocks or bonds or maybe even real estate, crypto versus currencies like what I do, is you can use an indicator called the Sharpe ratio. And what it does is it looks at sort of the return that you're expected to get versus the volatility that you're expected to get. And it's a measure of how much risk for how much reward. So yeah, you might make 300% on a crypto trade, but you're worried that you'd also lose most of your money, right? Well, that's what we deem volatility, sort of like a risk reward ratio. So, the Sharpe ratio was created by a guy named Bill Sharpe. He ended up actually winning the Nobel Prize because he had the same questions and concerns that you have. How much reward or risk, but more interesting, how much risk for any reward, right? And so now you can compare all these markets and you explain how the ratio kind of works and all that kind of stuff. And at the end of it, obviously you're going to say, well, crypto might be very exciting. What I do is quite boring. I only make 50% a year. But I've done it over multiple years and changing market conditions. Bitcoin's up, Bitcoin's down. I do my 3% a month. So I have significantly less volatility. Yeah, and I only make 3% a month, compounded about 50% a year. Some years more, some years less, but that's the difference in market conditions, right? And you start having these conversations and they'll appreciate it. Okay? Versus most people that just spit out sales pitches. William talks about crypto investors all over the social media and stuff. That's called pump and dump, by the way. Yeah. So if you don't like that, that's a form of market manipulation. So if you don't like that, then don't participate in the market. Okay? I actually wrote a paper that says, in Forex, so I compared crypto to Forex, what we call a crypto exchange is similar to what we call a Forex broker. Okay? They take custody, they provide a matching process, they charge a fee, that kind of stuff. In the United States, for example, right, those brokers need to be regulated, and there are constraints on advertising. Okay? So YouTube, for example, won't let me advertise on YouTube because Forex.Today or FX Bootcamp are related to foreign exchange services. And they just won't allow it because the government has quite a bit of regulations and restrictions on that type of advertising to prevent the crap that you're getting via social media like Twitter, for example, and some others that are bombarding you with bullshit trading scams, right? But you can't promote those types of things on YouTube because of the regulatory compliance issues required by foreign exchange traders, foreign exchange services, foreign exchange brokers, all that kind of stuff. So that's why you'll see a lot of, trade stocks and options with me. I'm the world's greatest trader. Look at me. I'm on a jet. You should trade with me, right? I have a jet. You should trade with me, but you don't see that in Forex, right? You see that? You don't see that in Forex. So maybe that needs to happen, William, right? Maybe that needs to happen. Maybe it will happen is the better way of saying it. Okay. Am I trying to trap that trade? No, I'll remove the risk. So, yeah. So there's that trade. Pretty cool. Nice. Yeah. Yeah, William. The idea is that those traders are random. Their results are random. So they don't know when, right? Like, it's, anyways, whatever. And or maybe they make really good, wise investment decisions, but because of the volatility, they don't know or cannot actually get out of their good trades. So it acts the same. If the Sharpe ratio of the market, for example, like, right, like, let's say if you look at the stock market, you would have to look at its Sharpe ratio. Okay. Okay, so like what we saw in the past, the stock market went up 10% for 5 years in a row and then dropped 50% in 3 months. Okay. Cool. All right, so here's our oil trade now. By the way, did I convert any of you guys into believers of proper fundamental analysis for the energy complex? Is anyone out there now interested in becoming a quite serious oil trader? Oil, both WTI and Brent, maybe some nat gas, maybe some CAD dollar, maybe some NOKI. Anybody? You may have noticed the OPEC meeting. When was the OPEC meeting, the OPEC Plus? La 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 la. Well, somebody who didn't want to use his glasses. All right. Excuse me. Okay. So this report here, released last month, provides a detailed analysis of the oil market developments, including supply and demand levels and trends in the world economy. All right, read that. Done. How about reading an overview of the OPEC meeting yesterday? No, Wayne, that's too much. I can't do that. Overall, demanding countries, what? Look, they give you supply and demand side of equations. Okay? Ha. Huh. How many people didn't know about the OPEC meeting? Anybody willing to admit it? Is anyone willing to admit they didn't know all the banks in the United States were closed on Monday? You showed up ready to trade like it was just any other Monday? And you're like, wait, I was investing money when nobody else on the planet was investing money? It happens. If that happened to you, you got to recognize that you don't have your thumb on the pulse of the rest of the world. Yeah, in the UK, right. But people may find out that they still showed up, and if so, you're not on the clue train. You're not on the clue train, right? You're not aware of these too many things, but you know what you know, if you know what I mean. Okay. Revelation said, oh, you did? Great. The OPEC meeting was what I looked at. Great. Would you mind revealing your fundamental analysis? I already knew all this, though. Nothing's changed. Okay. Okay. Nobody wants Iranian oil. Demand is higher than people thought. Okay. Supply was diminished in the United States back in February. You know, everything is determined on countries reopening. And of course, and you should know this, OPEC increased production. Okay? Right? You got to know that, right? Right? You know that, right? OPEC increased production, but denied Iran access to the global markets. Yep. Cool. Got to know this stuff. Okay, cool. Nat gas? Not really. No. But is it tradable? Faux show. For example, let's just look at April, for example. Here's an April buy. And we know this because this is a March exit. And this is, right, April in. The April in, right, targets this price level. Okay. And we can see that we hit the price level, collapsed. Okay. And now, if you're a nat gas trader, you're going to try to buy, or obviously you already tried, but let's just say at 290, 2.9, and your target is here at 3.3. Okay? That's the obvious plan that's in play. Is that tradable? Faux show. Well, what about this? Yeah, we call that resistance, so you'll have to deal with it up there. But that's why you buy low, right? It's just a basic swing trade. Okay? Oh, I dropped my glasses again. Okay. Well, the issue then, Revelations, is what is the trend and what creates the trend. So if you look at the data that was released yesterday, aka what was agreed to, you have to ask yourself, okay, what did OPEC do? Why are they doing it? And my guess is what they're doing is testing the waters by issuing oil into the global market that Iran would have issued to see if it crashes. And if it negatively impacts, then they'll pull it and tell Iran no. But if the world accepts the new supply and prices remain the same or even continue to go up, then what they could do is taper that and allow Iran to enter in the fall. But more likely, what is going on now? Why is oil going up? And what do you expect oil to do over the next 6 months? Once again, if anybody did the research I asked them to do a month ago, you can see the seasonality of it. It's like, it's so stupid, obvious, straightforward right there, that you're going to now continue that trend, not what OPEC's doing. And if OPEC makes significant changes, you'll have to see, well, how will that impact change anything? And if it does, what kind of impact would it have on the natural trend? So, for example, this year maybe is going to be rainier than a normal year. Are you not going to plant seeds as a farmer? You probably will still plant seeds. Will it impact your yield in a positive way or in a negative way? Probably. And if so, to what degree and in what ways, and what should you do about it? Those are the bigger questions. Okay? But if you don't know when to even plant your seeds, You're a corn farmer. Do you plant in February? Do you plant in April? Do you plant in May? Like those are the basic trends. And what I'm talking about now is a basic trend that's influenced by the weather, meaning current market conditions of supply and demand. So it's going to be your basic guess on how the trend will continue, right? The trend will be influenced by the weather, but, right? I don't know if this makes any sense anymore. I didn't sleep enough. So anyways, yeah. Dude, yeah. Yeah. Well, that's not the point, though, Cash. Cash is saying June is the third best month. That's not, I mean, sure, but that might be true. It might not be true. I don't disagree or argue that point, but that's not the point that I'm making. There's something much more significant than the goodest or baddest or modestly month. It's that there's an important to that change. Okay? So, for example, if I agree with you, and I don't disagree with you, it doesn't mean I agree with you, but let's just say I agree with you. It's not that it's the best month. Okay? Is it important? Yeah, but it's the reason why it's one of the best months. Okay? And also, the best month doesn't tell me, do I hold for 6 weeks or do I hold for 6 months? Doesn't answer that question either. Right? Because you could have July being the third worst month, and then it ends up not helping me anymore. That's all. Okay. Great. You know the loon sitting on my Aussie. Sitting on my Aussie all day long. All right, so this is me slowly making money or quickly not making money. Not really sure. Okay, we'll see where this goes. So far, it's gone nowhere. Cool. Okay. Do I have MACD divergence? Nope. Okay. Nobody's selling. No one's taking profit yet. So, okay, great. So there's nothing really left for me to do here except wait for the break or get knocked out on the, what do you call it? The reversion. Odd is facing a selling pressure. Well, I'm looking at this and MACD says no. Not on this time frame. I'm looking at it on the 4-hour. Okay, if I'm using MACD to measure market, I look at that and like, nope, there's no selling pressure. Okay. Cool. So I'm fine with that. I'll let it do its thing. And if it doesn't do its thing, then I get knocked out or break even. Cool. Same thing, farting around waiting for euro. The trade is already on. Your stop's already at break even. There's nothing really left for you to do. If you're late in the game, then you should already have a basic plan. Okay. The basic plan is, again, pretty simple. Oops. Okay. And that is you buy a dip, right? Cool. Why do you make it so complicated? Okay. Peter, it's all in the training course. Just take the course. Okay. Sir, one question often comes to mind in my mind: why market makes structure like double top and breakouts and retest if nobody controls the market? Well, who does control the market? People. Okay? And if I teach you how to trade properly, and there's 1,000 other people just like you, that I've taught how to trade properly. And it's probably closer to 100,000 people. But anyways, then by and large, the aggregate of the 1,000 people will trade just like you. So what happens is it becomes a self-fulfilling prophecy. Okay? But really what happens is, okay, look, this is the only thing that has happened. I don't know why people make it so complicated all the time. Okay? At some point, dude, are you a buyer or not a buyer? Are you a buyer or not a buyer? Right? This could be a buy, or in the future, this is a buy. So that's just what you're supposed to do. So you've made a decision that you would like to buy euro yen, but you'd like a deal. It's like you've decided to buy a house, but boy, if you could offer 95% of the asking price and get the deal, you'll be happy. Okay, that's that. It's just like you already decided you want to buy. So if you can get a deal, then you'll do it, right? It just, that's how I look at it. Retail traders, amateur retail traders, have no freaking clue of what they're doing. Okay? And so they lose 20% of their account in here, right? Because nothing happened. The way I teach you is you buy here and you're done for the month. You buy here and you're done for the month. You buy here, you're done for the month, right? And now if you get an opportunity down here, you'll buy for the month. But here's the interesting thing. I prepared people 2 weeks ago to say, you must be prepared for it to not come back this month. Okay? Now, I believe these are just weeklies, but no, they're monthlies. So you'll have to plan accordingly. Okay? But that's foresight. That's sort of experience. So people trade technically because they believe other people will trade based on those same technical decisions. Okay. Okay. Salim says, hey, I got long pound yen yesterday, long, right? Long. Well, like, for example, when we look at euro yen, okay, this decision is being made because of this. Okay. So it's like for this euro yen, the best trade was here like 10 days ago. And you'd be done for the month of June. That's what I'm trying to teach. Because now if you're waiting to buy down here at 133 or 132.50, there's a more than reasonable chance we don't do this month. Okay? In fact, there's a higher chance that it does this month. So I have it planned that way. Okay? So if this is the 1st of June, what am I doing somewhere around here? What do I have planned? What did I plan 4 months ago? Yeah, take some time off. So that means, do I think it's going to, oops, that was supposed to be red. Come on now. Do I think it's going to be a good buying opportunity down here? Well, no, I wouldn't want that. I wouldn't have planned my vacation around that kind of timing. So then what is it that I expect to happen? Why would I plan it here? Well, I expect this to happen. Okay. So if I took my money and left the market and took a few days off, Cool, right? Right? Yeah, isn't it interesting? It's not really vacation. I don't really take vacations. Think of it more like a holiday. I think there's a difference, right? So here's the big thing, right? Pedro says it. Oh, but this year could be different. It's never different. It's never different. Okay. Okay, that's that. Right? Those are infamous words. Oh, this time it's different. Yeah. It's more like yeah. So it's not really me turning my back on the market, but beautiful little trade, beauty and the beast. So somebody caught this. They said earlier, awesome, right? Yep. Pretty complicated. Okay, pretty complicated. This is one of these things. So you bought at the M2, really? Right? Such a well-planned trade. Right? Yeah. It's one of these things of course, right? Are you guys getting to that level now where you're just like, well, of course. Right? Yeah. Yeah, Revelation. Yeah, but it's what we talked about. It's like, well, what else would you be doing? If you're a bull, it's like, let's go back in time, right? Like, okay, you're a bull. What does this green area mean? Up. Okay, you're a bull. Now you've had a higher high. What do you do next? Higher low. Fibonacci. Roll reversal. Pivot points. Buy at the M2. Like, I don't know. Like, what else is there? Right? Roll reversal. I mean, but it's like, well, that's how you trade. That's what you're supposed to do. So once again, somebody said, what do you think is a good trade? So I guess I should be patting everyone on the back like, oh, you made such a good trade. But like, what else would you have done? Like, it's the only thing, right? So it's like, well, okay, great, right? It's sort of like getting a medal for being 8th place out of 10 people. Are like, hey, good job, dude. Right? It's again, it's like, it's the bare minimum, right? It's the bare minimum. Like, that's what you are supposed to be doing. So do I give you a big hug and some milk and cookies? Like, you're doing, that's the bare minimum, right? That's good, fine, good, great. Is it good? It's just what you're supposed to be doing. Wait, maybe I should have 9 other indicators, right? You're like, but it's all there. I mean, the fact that it's right, like, look at this. These are my pivot points, right? It's telling you should buy here if you're a bull. You should buy here if you're a bull, right? You should buy in here if you're a bull. You should buy in here and if you're a bull. You should buy in here if you're a bull. Like, I don't know what other people do or why they do it. You guys see that now? Like, why is it so complicated? And of course, I know it's complicated, but I'm trying to make a point like, are we just screwing it up? Are we making it 10 times more complicated than it needs to be? And if so, if you feel like maybe you're adding a level of unneeded or unwarranted complexity, what are you going to do to simplify? Okay? What are you going to do to simplify? Okay? Up, 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 down, down, buy, right? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, up, right? Right. Alton needs a monkey to press a button. And, maybe I'll be your monkey one day, right? You'll just pay me to do it. Oh! Right? Pepperstone's like, it's that easy. Well, here's the interesting thing. Like, the way that I designed this indicator is it's only telling me bullishness. Okay? It's cool, right? Like, this is me drawing it manually, but let's say you just need the tools to do the thinking for yourself. Okay? Yeah. These are the prices. Okay. So it's only Wednesday. And this is calculating next week's buying price. So if not NFP takes us up here, okay, then it's going to be here. And and you may find, what did it do? Click something. How do I unclick it now? Hello, delete. What did it do? Guess I have to do this. Okay, delete. Okay. So inevitably, here's what's going to happen. It would make a higher high. You'd look at roll reversals. And your plan for next week would be buy a dip off a roll reversal and continue north. This is easy. So again, if you're working on your technical analysis, I've simplified it so much that it's supposed to be easy. The difficult part is understanding that it's going to do this before it's happened, so that you can be ready, willing, and able, okay, to know when to be a bull and when to stop being a bull. Okay. Yeah. La 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 la. Okay. When will this be bearish for you? You're trying to decide whether to be a bull or a bear. When does it actually become bearish? Well, there's two ways of looking at it, okay? One way is to say these have to cross down. But that ain't going to happen anytime soon. It could take a month. Obviously, you'd like something a little more sensitive to give you a heads up earlier. Well, then you could also use the 5/8. See, on April 24th, it crossed up. If you bought my book, shameless plug, I don't make any money on it. You just buy it. I don't think I even cash the last 2 or 3 checks that come in. Honestly, I don't make any money on it. So buy it. Okay? Here's what happens. In my book, it says you're a bull and you're going to buy the next pullback. So you're long there. Okay. Okay, cool. Now, you can choose to take profit here or re-enter. That's your call. Okay. All right. Another thing you can do is say, would a bull buy at this price? David, that's not what the 200 EMA tells you. And I don't use an SMA, by the way. Yeah. So, yeah. And that would be so slow. It would be like irresponsible and negligent to say, now that it's come back to the 200 EMA, now you're going to do something? Dude, everything that already happened. So now I don't know. No, the answer to that is no. But go back to this, guys. Would a bull buy somewhere in this price? Yes or no? Okay. Yeah. So that's what I'm saying. Like someone like, do I give you milk and cookies for doing that? No. If you can't do that, you don't know how to trade. It's that simple. You don't know the basics of price action. You don't know the basics of swing trading. You don't know how to analyze moving averages. You just don't know what you're doing. I mean, it's fixable. I'm not bitch slapping you over it. You just don't know what you're doing. So whatever you're doing is really quite irrelevant and probably incredibly inconsistent. Okay. But that's just basic trading. Cool. Now, at what point do you want to seriously reconsider your bullishness? Would you be quite concerned below here? See, what could happen if you're down there? Let me just draw it out. Okay, what could happen next when you're in this spot? What can happen next? Up or down? The thing is, you don't actually know. What you know is there's a much greater chance of reversal than before. But the market is fundamental, not technical. But what it means is it's not likely to reverse here. It's significantly more likely to reverse there under these market conditions. Same price. It can continue going up because it's going to do whatever the fundamentals tell it to do. Your moving averages are lagging. They'll cross back up. Okay. Sort of like this says buy and this says take profit and the next one says buy again. Okay. But they're lagging. They're lagging. Because if you waited for the 5A cross on the daily chart, by the time you got it, price was already there. So don't be fooled. So you got to have better analysis, okay? But it does set this up for more challenging conditions. It may bring volatility to your performance, okay? But the thing is, you can anticipate all of that in the future. Okay. But right now, do you have to worry about that? Well, what would create the sell-off in Great British Pound Yen? Something bad here or something bad globally? Is that likely to happen in the next 2 weeks? Would it be non-farm payrolls? No, we had some volatility last month. Some unexpected data released last month. Most likely there's going to be massive revisions. Most likely, I would say NFP still would be an underperformance just because of me walking around doing basic analysis. There's help wanted signs in every restaurant. And people don't want to work as a waitress until they run out of unemployment benefits at the end of summer. So, yeah, NFP is going to be disappointing. And the Fed's going to say, look, there's no reason to change policy. We're not at full employment. Okay? So it would have to, right? So it wouldn't be NFP. It might be the Fed meeting. But more likely it would be profit taking, which I think would be closer towards July. So if we're above this, I'm going to make money. Am I going to be surprised or happy about it? No. Like what else? What else would happen? Like, I don't. Okay, and that's it. Oh, I need some haircut. Okay. 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 So if we dip below the 21, I'm going to become cautious until I see evidence that the market has returned to its bullishness. Cool. Okay. Cool. This is still coming together. Okay. Cool. Cool. Okay. Should I be a bear at this point? No. What about if we do this? Yeah, well then I would seriously have to ask myself why. Okay. But I certainly wouldn't be aggressive anymore. So I think what happens is people, they don't have confidence in their analysis, and so they get emotional. And they're like, well, but what if, but look, are you a bull? Yeah, but, all right, here's what a bull does. They buy here. And if it comes down to here, get out. But do you understand? Like, that's what a swing trade is. This is the buy zone. And your stop is probably about here. So you bought it around 90.50. 90.50. Let me do that again. You bought it around 90.50. You had it planned when we were at 91. Do you remember doing the plan last week? So it dropped to 90.50. You bought it. Your stop is probably around 90.18. I'm just guessing. And yeah, you bought it on Monday. Or you bought it yesterday, and now you're done for the entire week. Or sorry, even the entire month, but I think that's weekly, right? So you are done now. Are you making it more complicated? Okay. You might be. You might be making it more complicated than it needs to be. So in that case, I ask you to simplify. Okay. What is it that you want to do? Okay. So if you recall, May opened hot, moved sideways, and then we're expecting June to do this. We expected a hot open May, sideways, hot open June, sideways. But we talked about that 9 weeks ago, 10 weeks ago, 11 weeks ago, 12 weeks ago. So, do you have the conviction? And are you doing your job properly? Okay, that's all it is. Okay. So, yeah, I would challenge you to simplify. Okay. Maybe go into your closet, start gathering stuff to donate to charity, get it out of your closet. And for every old t-shirt that you haven't worn in 22 years, right? Break your emotional attachment with it, donate it to charity, and at the same time, mentally throw away an unnecessary process that you have in your trading strategies. Unclutter your closet, unclutter your trading. Peace on earth. May the pips be with you. May your profits be above average. I got to go. Have a great day. Thank you for being part of the community. I will see you tomorrow. Forex.Today. We will cover ADP live and a bunch of other things. Get prepped for non-farm payrolls on Friday. Thank you, Traders Way, for being part of our community as well.